Welcome. What's going on? Hello. Welcome to the Life in Transitions Experts YouTube channel, Facebook group, and we are live on Instagram. My name is Courtney Rollins. I am the host of the Life in Transitions Experts channel, helping folks through the biggest transitions and challenges in life. I'm also the founder and operator of State Pro Service LLC, based out of North Carolina. I basically make the probate process and estate planning process easier for folks going through probate while creating income and wealth primarily through real estate. And today we're going to take a look at some of the options that you may have when you are actually selling your property. You're going to be hopefully receiving a lot of attention on your property, and there are different ways people purchase properties over time. Myself, the primary way that I purchase property about 99.9% of the time is through cash. It's a cash offer. It's quick. It's simple. Quite often, people are trading speed and convenience for a discounted price, and that's what a cash offer can do for folks. I have video footage content that I've created explaining what a cash offer is and why it may be able to benefit you. But today we're going to talk about more traditional financing in real estate. Much of the property that is actually sold in real estate aren't my target audience. As a real estate investor, I have to be able to get a property at a price that I can make a profit on down the road, whether I'm reselling it or turning it into a rental. But the majority of properties that are sold in the traditional way, they're looking for top market value, and they should get that. And quite often they'll go through a real estate agent or a brokerage, which is awesome. They'll list it, and you'll be able to hopefully receive top dollar. Now, these properties quite often are receiving traditional finance. That means some lender, some institution, quite often a bank, will provide a loan for the majority of the actual balance of the property. And now you are paying the note down for this lender. So let's look at some of the intricacies of a traditional offer in real estate and why it may benefit you, and why, yeah, some of the advantages and disadvantages of it. All right, so here we go. Boom. Traditional financing, we just went over that. That's when you're receiving a loan to pay off majority of the costs to the seller, and then you are paying the loan while you get the deed of the property. Depends on like deed, title, whatever they. It's maybe specific the name jargon in your state, but essentially you're the homeowner, but you still owe the loan. All right. One of the benefits is the lower immediate financial burden. It's way different. You have a $400,000 house. It's very different coming in with cash, paying all that. And now you're, we call it house broke or money house rich, but money broke, whatever the term is. You have a house, but you don't have as much disposable income anymore. So being able to get a loan helps you lower the immediate financial risk. You'll quite often have to put in a 25% if you're an investor, to way lower sometimes, even sometimes 0% down, depending on programs, like if you're a veteran and other programs that they have. So check them out. So the financial burden can be pushed off, and with that, you have hopefully more disposable or income. And that's the second thing. You have the opportunity to leverage. Not all debt is bad debt. I'm not getting into the Dave Ramsey or the Grant Cardone or Robert Kiyosaki uh, field of whether debt is good, um, whether you should pay off your house or not. But I do know that if you have more money available and you didn't put it all into one asset or one property, you can use that for investments, and hopefully you can make money for itself. Money that money can have babies, as they say. So that leverage is important. Take a small percentage of money or action to get a great deal out of other places. So that's awesome. So one and two are very tied together, close tied together. The low immediate financial burden and having more funds to leverage and hopefully invest and spend more. Yeah. All right, number three, there are tax benefits. I'm not a CPA or giving financial or legal advice. I'm not an attorney, but mortgage interest payments can be used as tax deductions or to give you a tax break at the end of the year or around April time. So make sure that you are taking advantage of those, talking to your CPA, figuring out what type of statements or facts you want to present so that you can hopefully reduce your tax liability if that's the route you want to go. All right, some of the negatives or cons to it is that it can be a lengthy process. Oh my goodness, being vetted Anybody who's ever bought a home the traditional way, you do the underwriting, being vetted by those financial institutions can be nail biting. You keep asking for the same documents over and over, and one person doesn't seem like they're speaking to the next person, and it can take a long time with the risk for the seller and the risk for you. Opportunity costs, you may not get, you may be losing out on other opportunities because of this process, and then find out you're rejected at the end. The seller may be losing opportunities to actually have someone come in who's definitely going to buy the property. But this is just what it is when you're actually going through traditional financing. So it can be a lengthy process, and speed sometimes can kill a deal. So just be aware of that. The financing issues, there's a risk, when you actually are financing or have a property finance, you know, the credit score may fall through. The appraisal might be a problem. These properties that they're lending on, they want to make sure it's a quality product that they're actually lending on. So you usually have to get inspections and appraisals. And if they come back short and don't match, it can be very, very frustrating. That's why selling properties as is or buying it in cash can sometimes be give people peace of mind. But um, yeah, that's the challenge. And then with that comes contingencies. Quite often in traditional financing, these contingencies can be used as negotiating leverages for the seller or for the buyer, I should say, when they say, "Hey, well, check this out. We're not getting this funded until you're not going to be able to sell this or get a loan. Any buyer's not going to be able to get a loan this until you fix the kitchen roof that's leaking in the roof or whatever the insert the issue or the contingency is. It can make it complicated, it can create delays, and it can present challenges. Um, so three challenging things is the lengthy process, the risk of financing issues, as well as the contingency that may show up. If you want to talk about selling your property, I'm actually love when people reach out and call me and try to like really figure out what the puzzle is and put those puzzles pieces together to create a map or a picture of what hopefully that picture looks good for everybody involved. Feel free to reach out to me, Courtney at estateproservice.com. There's my number there, 919-341-1992, or you go to www.stateproservice.com or drop a comment in my YouTube channel or video and reach out. I'd love to hear what your challenges are if you're interested in selling. I don't try to force myself fit. I don't try to force my option onto you to try to present as many options as possible to you, and hopefully you can make a very informed decision. All right. Well, that's all I have for you. And I'll be back on here tomorrow with some more content. And I'm going to start doing case studies where I show some of the properties that I've been inside and some of the estates that I've been able to support. All right. And other than that, this is Courtney Rollins with the Life in Transitions Experts YouTube channel. Hit that like, hit that subscribe, all that good stuff. As I say always, this is LITE, Life in Transitions Experts. Let your light shine. Cheers.